Hey everyone, welcome to Breakout Wednesday. It's late Tuesday night on the 14th of Jan 2020. I'm on the East Coast for the next 6 weeks for family reasons, and so this talk will probably be coming out a bit earlier than it has been over the last 6 months. So this is the chart of the Nasdaq, which is raging higher still. All the Iranian issues last week were just kind of shrugged off. It just goes to show the demand for stocks at the moment around the world. In America the most, I guess, but in globally most stock markets are doing pretty well. Okay, the All Ords in Aussie has broken new highs. It's looking good. It's broken new highs before, then failed, and so let's just see if this holds. Obviously we're hopeful of a holding, and so what I'm going to do is just run through a bunch of different things tonight. First of all, just remember this is just a video blog on how one trader sees a market. It's not financial advice, guys, and I'm not no interest in being a financial advisor. So I'm going to run back, just pause this chart for a second, get set up. 1 second. All right, now back. This is a chart of the All Ords showing the bull market that ran from 2003, early 2003, till the GFC hit. Okay, in like late 2007, and I guess the reason I bring this up is the All Ords have just made new highs, and no one knows if it's going to fail or if we're going to have a raging bull market. And there's going to be all these people out there on social media and in the news telling you that all sorts of things which they have no clue about. It's just their opinion, and I like to remind myself of this bull market here because no one's opinions mean squat, right? My opinion means nothing. No one's opinion means anything other than what the hell the price is doing, all right? And I remember during this bull market from 03 up to 07, and every single day there was people saying that we're hit a top, you got to sell everything, you got to go short, this is the end of the bull market, it can't go any higher, it's overbought, blah 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 blah. They were saying that in 204, they were saying that in 05, 06. They were saying it all the way to the top, and those people just probably didn't make any money, and the money was made by trend followers and investors who had what it took to just sit on their hands, like that famous book of Jesse Livermore's, the money's made when you're sitting, or not when you're overthinking things and buying and selling and trying to be really, really quick and smart about everything. The money's made in following trends and sticking with winners. All right, and so anyway, I quite often look at this just to remind myself that how good a bull market can be. We haven't had like a true awesome runaway bull market like this in a while, where the All Ords more than doubled during this period. But there were stocks that went up thousands and thousands and thousands of percentage points. Okay, and so anyway, so I'm going to keep an open mind. I'm not saying the bull market's happening. I don't make any predictions. I have no clue. But all I know is that the price right now is breaking to new highs, and therefore I'm going to keep an open mind because the stock market can be an incredibly good, powerful thing when it gets going. Or obviously, then we had the flip side of the GFC, and this is what happens after a raging bull market. And that's life. Now, I'm going to just run through 1 second. Okay, so next thing, I'm going to quickly just run through the sectors on the ASX and just show the strong sectors and the weak sectors, because I always concentrate my purchases in the strong sectors. I understand that some very strong stocks can be in weak sectors and they can buck the trend, but for me, trading is a bit like trying to be the casino. I'm trying to put as much probability behind me as possible, and into every single trade. And so, that's my theory behind it. I understand other traders don't do it, and that's totally cool, which is how I do it. It's each for their own. Okay, let's just run through it. Okay, so what's the first one? Banks, they look weak. They're below all their moving averages. So I have a really long-term investment in the Commonwealth Bank. I'm not going to touch that because the Commonwealth Bank, if you look at it, it's looking awesome. Okay, it's bucking all the other banks. Okay, so I'm getting a bit diverged here, but let's just look at ANZ. Let's just look at the big four quickly. ANZ looks like it might be breaking up from here, but it's still below all its moving averages. Blah blah blah. Westpac I talked about last week. This looks. I'm not going to touch that thing. I don't know why I talked about it last week. It might be bottoming, but it's still a laggard, and the market's all-time highs, and this thing's all the way down there. So I'm not going to, I'm not going to entertain the idea of touching that. And there's another one I'm forgetting, isn't there? NAB. NAB is as chicken feed. Okay. Bank of Queensland looks weak. All these banks are looking crap. Okay. Apologies. Just stop that alarm. Okay. And so the Commonwealth Bank's looking strong, the rest looking crap, and if we go to the sector analysis, that's indicating that. And so no new trades will be in the financial industry for me. Consumer discretionary is looking strong, energy's looking strong, happy to trade energy stocks. Financials looking weak, already chatted about that. Gold kind of looking so-so, don't really have an interest in trading gold stocks because there's stronger sectors out there. Healthcare still looking strong, no problem with health stocks. Infotech looking strong, that was cool. Resources looking strong, that's good. Materials looking strong. Metals and mining looking strong. Real estate kind of so-so, it's below these highs here. We might be making a run for the highs, but I'm going to leave the real estate stocks for now. Communication discretionary still hasn't broken that high. Maybe it's looking okay, but certainly other stronger sectors out there. Utilities about the same as communications. Okay, so that's the sector analysis. I do it really quickly like that, and it just pinpoints the sectors which I'm going to try and focus on. So at the moment it's tech, technology, energy. Okay, same as last week really. Software, energy, that sort of stuff. Okay, all right. So now the next. Okay, so now I'm going to run through just quickly the stocks I talked about last week now, and give a quick update on those. I'm not going to talk about all the stocks from last year. It's just too many. I'll be here all night, and I'm kind of just starting fresh for this year. AEIS is still setting up in at all-time highs at highs here. This is a weekly chart here. This big gap up here was on a huge earnings beat. All right, so I've read all about that earnings beat. It was a pretty good earnings beat, and so this is a tech stock, chip stock. So I'm still waiting on that. That's one of the setups that hasn't gone yet. ALG, I don't remember talking about that last week, so actually I pressed the wrong button then, guys. I'm up in my bloody scan thing instead of talking about last week, the wrong thing. Okay, Coop, talked about last week, still raging high, that's awesome, going high, going well. HIL, I talked about last week, and I've entered that as of today. We had a bit of an increase in volume on the breakout, not huge, but it's about 3 times higher than the average there. It's going to be interesting to see how this plays out. I've got a pretty tight stop loss, and so pretty happy with that entry. It's a bit of a cheaper stock, which I'm trying to stay away from this year, but I like that pattern. I like the sideways movement there. I like the low volume and the huge dry up in volume. Like, if you just look at these days, I know it's Christmas and stuff, but you just look here, there's hardly any volume as it tests these lows, and then a bit of an increase in volume, and so there's a lot going to that, but let's just see how it plays out. IGO, I have not entered that. It kind of gapped up through everything. I'm just waiting for that to set up. KGN, I said I wanted to see this a bit more right side and tightening. We didn't get it. It just poked its head above. I did not enter that, and so I'm kind of just going to let that do its thing, which is cool. Massimo entered that, going well so far. Navadia entered that, it's screaming higher. ORE, talked about last week. I'm not in that. I didn't enter it. I'm pretty pissed off with myself for missing it. It's not something I should have missed, and now I'm looking for a pullback. And so this to me has potential of being a total lead-in stock, and I'm looking for a pullback. And so what I would do is I will talk through on this broadcast if I ever get in this on a pullback, okay? But I'm either going to look for a tight congestion pattern, then a breakout, or I'm going to look for a pullback to around the 61.8% level, and I'm hopefully going to hit a confluence here where I'll get a pocket pivot or some pin bars, or it'll hit its 20-day moving average and this 61.8% are roughly the same time, and give me some nice reversal candles, and then I can get in with the tight stop loss there. Okay, so that's how I'll be looking at it if it doesn't give me an opportunity to play the breakout. So moving on, PPH, I am long still. SEI, I am waiting, and why is my internet's gone slow? Okay, I'm just waiting for that. It hasn't broken out yet. Oops, I'm back to the wrong one again. Shopify, I'm still long. That's like one of the leaders of the market, and there's no way in hell I'm selling it. Okay, Tesla, it is screaming high. Likewise with Shopify, it is the leader, Tesla. and I just hope it has a pullback at some stage. Twilio I talked about last week. I have bailed on about half of this position. It hit its 200-day moving average and it hit the depth of this pattern here, right where I have these two lines. I got out half my position last night. So hopefully I'm going to ride the rest of that a lot higher, I hope. Westpac I have scrapped and have no interest in. Okay, so that's last week. Okay, and so now I'm just going to quickly move on to what I do every day when we have a bull market like this. I do my normal scans, but if I'm rushed for time or whatever, I make sure every day I do my 100 period breakup scan. Sometimes it's 30 or 50 day, but I just, I'm trying to reduce the number of stocks I see. What I'm really doing here is I'm keeping pace with the market and trying to, figure out what the leaders are and make sure that I'm watching these leaders. So ADT is a leader, and super strong setups here in ADT. So that is on my watch list. I look at this stock every single day. I know what it's doing at all times, and I pretty much live with these stocks on a daily basis. Okay, Australian Finance Group, sure, that looks pretty nice, but it's in the financial sector, so I don't want it. ALG, this stock's been looking really good. It's been setting up for a while now. I've got, it had, I'm getting sidetracked. I had this flush out below lows here, a big gap up, formed this tight channel. It popped above its 200-day moving average, formed this tight range here, and then broke up. Okay, and so it's close to perfection, but it's too late for that now. It's bolted, and I'm going to wait for a pullback on that. But ALL, which is a close cousin of ALG, okay, they're both in the consumer discretionary. They're both in the gambling stuff. Aristocrat, if we flick to a weekly chart, has had 1, 2, 3, 4, 5, 6, 7 weeks consolidation. It's breaking up to new highs, and Aristocrat is one of these stocks. I don't know. I've traded it, I don't know, probably a dozen times over the years. It can really go when it wants to. It can form good trends. It's a leading stock. It has institutional support, all that sort of stuff. So I like Aristocrat. I have a position in that. Okay, and so I just flick through this. Most of these stocks I'm not interested in, but it just, if you're going to be a trader that is serious about this and wants to be, trying to do this full time, then you really need to keep pulse with the market. And during a bull market like this, this just simple breakout scan every single day is an important thing to do. Okay, here's BFG, which I talked about a lot last year when it was forming this base here. Okay, it's had a huge run. So obviously that's in the financials. So that's a great exception of what I was just talking about. Bingo, it's just breaking out. I don't have any money left to whack into Bingo, but it's a pretty good setup. Okay, and so I just do this scan every day. It is a bit retrospective in the sense that a lot of these stocks have already broken out. Okay, however, it really does keep my pulse on the market. Okay, and so in terms of finding new setups, then what I do most nights and go back to my second or third week talking, or maybe even the first 3 weeks. Okay, they're pretty for new members. Go back and listen to the first 3 weeks, and it goes through all my favorite scans in there. But I will do a weekly, a Davis box scan every day too, and usually I press first box, but any box is good too, and I'll just do that scan every day, and it will find new setups. Okay, all right, and so this is one setup. It's found Santos. It's forming a little Davis box here above. This stock's raging up at the moment, and energy's strong. The sector I showed you before is strong, and I just want, I whack this in my possible watch list, and I just want to see this tighten up and pop around in its Davis box a bit longer, and then I'd make a decision on trading that. Okay, so there aren't that many actual new setups at this second that I am stalking, because I've been trading these breakouts over the last few weeks, and I'm kind of long now, and I'm pretty much 95% in the market, and it's just a matter for me of sitting on my ass and letting stuff go higher. All right, and I think the point of today's talk is to really come back. If I look back at that bull market and just at my trading career since I started, in 03, 04, whenever it was, I think the difference between traders that make it and don't is really all in the head. Okay, and this is probably my favorite book, Trading in the Zone by Douglas. It's incredibly good. It's kind of a hard read, in the sense that, I don't know, like it's a bit harder to get through than your average book, but if you can really comprehend it and take it all in, it helps so much. And I reckon out of people listening to this, 75% will not listen to this book, and I bet you those 75% will never fulfill, reach their goals. Okay, the 25% that do have a fighting chance. Take care.